Welcome to the second panel, everybody. Very happy to have Barbara Kolm here with me, the director of the Austrian Economics Center. She has been fighting for freedom for a very long time. The Free Market Roadshow has been going for 17 years, which I think is very impressive. If you look at, how many cities that are hosting these kind of panels. Barbara has also served until recently, September, right, as the deputy chairman of the Austrian Central Bank. I think it's quite rare that you see people with not only from Austria but with an Austrian economics conviction, sitting in those positions, and I think that was most welcome. So what we're going to do in the second channel is we're going to focus on monetary policy. Of course, I don't have to explain to you how important monetary policy is for freedom. If you really want to destroy society, hurt it very badly, and you don't want to carpet bomb it, then there's no better method than to mess up the money supply and to undermine the stability of money. All nasty things can happen when you do that. And sadly, in history, we've seen many examples of that. That does, of course, not stop the expert class from suggesting all kinds of monetary policy experiments, mostly just the recycling of the previous failed experiment. We only have to listen to Goethe back in the 1700s, who was railing against paper money. But what did he know, right? The lessons are always forgotten. So it's incredibly important to try to refresh them to everybody. So without further ado, Barbara, I'll give the word to you.
Well, thank you very much, Peter. And as you all know, Faust, of course, was truly important. And if one should, like Hayek, reread him eventually to come to new ideas and new conclusions. And what I would like to do today is just guide you through a little bit of what we have done wrong and what has happened, and give you some numbers before Peter and I will discuss monetary policy. And I was just at the conference in the United States on monetary policy with former Fed executives and directors and great intellectuals discussing also the difference between the Fed system and the Euro system, the European Central Bank. And we have to admit there is a huge difference, because if they start printing money, it has different effects on the economy as when we do so-called print money and start our QE programs. Nonetheless, on both sides of the pond, and I'm very frank here, the results are bad. And despite probably the ideas that, one should do it or one needs to do it in order to save Europe, and I'm quoting Draghi here or paraphrasing Draghi, I think he just kicked the can down the road. And we did not solve any problems, as a matter of fact, and we have been discussing this on the first panel as well. Doing homework on the nation states, in the nation states, would be a much more important task to fulfill than allowing both Brussels or Frankfurt, or both and Frankfurt, do a job that is probably not in their mandate. And before we talk about or look into details, I just would like to address some points that make the problems and issues even more difficult. And those are the geopolitical and security issues and threats, the technological challenges that we have been addressing in the past panel that Chris brought up with digitalization and all the regulation on that front. And of course, the environmental issues that are coming up. And, I'm a hunter, so I believe in nature, and I love nature. And but you don't have to enforce green policy on people. And it's definitely not in the mandate of the European Central Bank to fulfill green policy and politics. And I think we need to step back on that. And in order to confuse you even more so, I use the slide by Larry Summers when it comes to what are the reasons for inflation and stagflation. And, it's just very, very complicated. And after all, let's go back to Hayek. And Hayek has a very simple explanation. And if you say, the more government is involved, the worse it gets, and the more policies we have, the worse they are. And if we look at the details here, the euro area growth and how it is slowing down, and what were the triggers for inflation. And to be honest with you, of course, the war plays a role, but it was the amount of money, the so-called QE programs, and I will show you some slides later on, that were the first trigger. And when we started the European Stability Mechanism in 2012, 2013, and then started with the API programs, this was actually building up the debt and kicking the can down the road. So this is the first reason for inflation. The second reason for inflation was the so-called Green Deal. What happened in 2018 when it was announced? All of a sudden, energy prices started to rise. What a surprise. I mean, everybody who knows logic and economics knew that this would happen if you announce a certain policy. And then, the sparks of inflation were there, 0.5% here and there, not too high, until the next program, COVID, came with the PEP programs and the lockdowns. And if you destroy the supply chains, if you distort supply and demand, what is the logic consequence? Prices won't work, inflation. So you have the third reason. And then the fourth reason, of course, was then this terrible war and the aggression in Ukraine, and then another distortion of energy prices with that. So we have four different reasons. And hitting at one place, this has never happened, actually. We had one single issue here and there, and if we look back in the 70s, it was a different issue. Many of us still have that in mind, especially in the US, and they fought it in a different way. But the way we did it here was different. So what I also would like to take into consideration when we look into inflation, the war in Israel, of course, will have a consequence in the rise of energy prices as well, and the long-term inflation expectations are on that front relatively stable, but they will be there. In China, we see the weakness in domestic economy, and they coincide with weak external demand, which will also trigger inflation and which will drive prices. And then, of course, and there maybe Chris has something to add on that, the US labor markets that show signs of cooling, and the slowdown growth also on the US side. I mean, of course, we will see differences before the election and after the election. As we all know, this is always a trigger for the economy. But right now, it is an issue. So, what has the ECB done? I mean, the interest rates hiked by 450 basis points so far, and to be honest, in short, too little, too late. There was an opportunity in Europe, which was between 2016, 2017, when Europe had seen signs of growth. But back then, Mario Draghi said no, because, of course, the southern European member states had not done their homework yet, and it was no option to kind of cut the programs. We should have done it back then, and if we had started to rise slowly interest rates back then, we would be in a different position. But let's face it. I mean, interest rates have been low since 2000, and then they went down a negative from 2008 onwards, and we keep forgetting that. And those are, disastrous. Here I have just the numbers for the APP program, the PEP programs. And when we thought back then after the European Stability Mechanism was brought into place, that the APP was bad. If we look at what in short time, within 2 years, what the PEP program has done, and I'm only talking here about what the ECB has done. I'm not talking about the additional programs that have been set up by our nation states, by Brussels, by the Commission, and by other financial institutions. It's just about that. And the consequences of this, of course, is that we will sooner or later have to reduce our balance sheets again. Which I'm jumping over the next 2 slides because then we're going into too much detail. But what will be the consequences? We've done this unconventional monetary policy for way too long, actually since 2008, and now we have to go back to normalize. What is normalizing monetary policy? Having interest rates, that refer to the real price of money, and one thing. And second, of course, let the banks do their jobs, lend money and work with money and invest and finance enterprises. And this has not happened. All those allocations have gone wrong. Here is what the Eurosystem has done ever since we kind of stopped the PEP program and the APP program. Well, the APP program, and it's just 30 billion per month that we reduce the balance sheet of the ECB. That's actually nothing in contrast to what we have out there. I love this slide especially because it reminds us of what the mandate of the ECB is, and it's definitely not green monetary policy and green finance. So that's none of its business. So we really need to focus on that. And it's also not the business of the European Central Bank to probably run a digital euro. I mean, there are companies on the market. This is my personal opinion. Don't get me wrong. There are many players on the market who have solutions out there to digitalize the economy also on the monetary front. And I don't think it's a task of a central bank to issue a digital euro. By the way, we have so many different payment methods, and there are many initiatives also out of Brussels that are great, that are working, that are very interesting for the companies, for the private sector. And why should we not allow the individual and the enterprises to choose among which product they want to use, and not the one-size-fits-all thing. And before I stop, I just want to remind you of one issue that has not been risen, and that is also important if we look into inflation, is the decrease of the natural interest rate. And this has been a long history of R-star, and the reasons are lower productivity, population aging, and the excess savings over investments. And I think, and it has been addressed in the last panel already, that the population aging is a huge problem in Europe, plus the lack of productivity. Don't get me wrong, we have countries that are still growing okay, and their economic growth is fine, but like Austria, I mean, we have to revise our data again this month, and we will have so-called growth of 0.4, 0.5%. I mean, this is not growth. And this is not what we need in order to be productive and competitive. I mean, after all, who is Europe competing with? Areas in the world that are, where you have a young population that is eager to work, that is eager to be, to gain, eager to contribute, and to just doesn't stop working on Wednesday because we have done our 20-hour work and we want our, no, I'm provoking a little bit, we want our work-life balance. And I think these are issues that we need to address as Europeans, how the next generation will also contribute in a way that we can outmaneuver the population aging that we see. And then one last point, I already mentioned that the digital euro, I don't think this is a solution to all the problems that we have. Many politicians might think it is. I doubt it, but at least if we need to address inflation, and this is what we will do now, I think this is not the task of the central bank to do it. Okay, this would be my remarks, and I'll hand over to Peter.
Thank you. Thank you very much, Barbara. Maybe before we go to Q&A, I'll give my presentation, which is overlapping a tiny little bit, but not too much. I'll do something very simple. I'll try to make an overview of all the programs and initiatives that the ECB has engaged in over the years. So I'm going to throw a lot of acronyms at you. So just to give an idea how massive this is, and of course, the very first one is its interest rates policy. So the ECB basically issues loans to banks. I often ask people, so what is the key thing that changes if a country joins the Eurozone? For example, take Bulgaria. Bulgaria has its currency pegged to the euro, and many transactions over there already happen in euro. So some people say, oh, it's not going to be a big change if this country joins the Eurozone. Now, or even take Montenegro, which does not even have its own currency anymore. And then the answer to the big change that will happen when those countries join the euro is that banks based in those countries no longer get a loan from their central bank, but they get a loan from the ECB. So the financial conditions are much looser. They will get a lot more money, hard currency basically, than they could ever had without. And what happens with those resources that those private banks receive from the central banks are typically invested in government paper or real estate or sometimes stocks. So the ECB's policies of low interest rates, trying to manipulate the short-term interest rate, not the long-term, which is also affected by the long-term factors you've mentioned, Barbara. This has been one reason to drive down the interest rates. They probably would have come down anyway, but they came down a lot more, you could argue, I think, thanks to these extraordinary or non-normal monetary policies. And since at least 2014, before, we've seen NIRP, NIRP, negative rates in Europe. This is not only in the Eurozone. Denmark has been quite active with that, but certainly also in the Eurozone. We had a policy called forward guidance, basically communication, central bank communication about the state of the economy, whereby it tries to indicate to market actors what its future policy will be. And the fact that the ECB says, oh, don't worry, we're not going to toughen up too quickly, is already a signal to those investors that this is what they can invest. So even if they don't then actually lower interest rates or do anything, announcing can already have an effect. Then we have the whole asset purchasing program machinery. First of all, quantitative easing started in 2015. I have that, if I have that right, with the PSPP, 2,600 billion euro, enormous sums of money. With economists pretending this has not really an effect. It's not entering the real economy. It's okay. Why are you doing it then? 750 billion with the PEPP. This is the Pandemic Emergency Purchasing Program. Then, second part of asset purchasing, we have the credit easing programs. We have the SMP. I think this was the Stability and Markets Program. A tiny 18 billion I see here. Maybe 218 billion. I cannot even like just pocket change as compared to what they've done later. But this was the first one, very important. Then we have a program that, to my knowledge, has never been activated, the OMT, the Outright Monetary Transactions. It's a program of the ECB whereby the bank makes purchases, outright transactions, in secondary sovereign bond markets. So it's illegal to purchase directly, so they purchase in the secondary market. I would say every serious lawyer should equate this, but that's obviously not what happened. This is all past. There were some serious challenges in Germany at the the top German court, but this was mostly theater at the end of the day. It was all waved through, then we have going forward the asset-backed securities purchased program, ABSPP, in 2014. Before that, we had the covered bond purchase program, CBPP3, in 2009. In 2016, we had the corporate sector purchase program, CSP, in 2016. So it just never stops. Then thirdly, we had slightly different from asset purchasing, the ECB engaging in subsidized lending programs to banks. Ultimately, all of this had the effect of suppressing the interest rate, pumping lots of cheap money into the market. So when governments in the Eurozone had to refinance themselves, which means take a new loan to pay back the old loan. You shouldn't try this at home. But this is standard procedures for governments to finance themselves instead of paying back their loans. That's seen as a crazy. So that the whole point of these programs is to pump lots of cheap cash into the markets, which then sort of court economists say, oh, this has zero effect on inflation. It stays in the financial world. And meanwhile, you can see, real estate prices go berserk. You can see stocks go berserk, but nothing to be seen here. Anyway, this subsidized lending programs to banks were called LTRO, slightly better known, long-term refinancing operations. A few years later, they started with an even more perfected version, the TLTRO, the targeted long-term refinancing operations. In terms of figures that amounted, you had LTRO, LTRO2, TLTRO3, amounted to 1,000 billion euro. What's 1,000 billion euro between friends? Exceeding the... So this was also a pretty big, effective program. If I got it right, 1 trillion between 2008 to 2020. Interestingly, we had French President Sarkozy very unhelpfully commenting that the point is for banks to pass on this money to sovereigns, to governments. He was not supposed to say that, right? That was obviously the goal, but the politicians didn't really pretend anymore at one point, or at least President Sarkozy did not. Then we're already in half. We have all kinds of promises made by the ECB, the most important one, of course, being the 2012 promise by Mario Draghi for the ECB to do, quote unquote, whatever it takes. He didn't make this in the Eurozone, he made this in the Eurozone's financial center, London, to investors, reassuring them that they don't have to worry too much about lending to countries like Belgium and Italy, and fearing that maybe they are not so well governed, so at one point they may not pay back their debt, because the ECB is there to do whatever it takes and rip off savers to bail out people and investors that take major risks. Then fifth, we have the Target 2 program. To be fair, this should not be seen as on top of all the other stuff, but it's sort of a different way of calculating the exposure. Target 2 is like if you go on a holiday with friends and one person goes to the supermarket, buys everything, and the others only a few small things, and in the end you sort of, you calculate who should pay what. Well, the same happens in the Eurozone. It's Germany that goes to the supermarket, pays for everything. So if at one point we have a problem in Italy or Belgium, and these countries can not longer pay back their debt, then apart from, and then you have another discussion on should Germany and maybe France then fork up some cash to pay for bailout loans, then once again you will have the Target 2 behind it all, with politicians in Italy likely making clear to German politicians, look, friends, of course it's in your right not to pay an emergency loan for us, but don't forget that if we are no longer friends, that you have a massive claim on us, the Target 2 claim, which at one point amounted to 1.1 trillion euro. It has come down a little bit, I think. For Germany, it's still very high. For the Netherlands, for some reason, it's quite low at the moment. So this changes a bit. It's a very important part of the Eurozone debate. And in Germany, you have the senior economist Hans Werner Sinn, who managed to write a bestseller about the Target 2 problem. I mean, it's quite an achievement, the Target Falle, the Target Trap, to manage to write a bestseller about such an obscure but yet very important aspect of the monetary union and its whole monetary bailout machinery. Because apart from that, you have also a fiscal bailout machinery, the ESM and all these emergency schemes, but I won't deal with that here. Then to conclude, there's one more thing, one more monetary bailout transfer mechanism that technically is not implemented by the ECB, but that is implemented by national central banks. And this happened during the Greek crisis, and it is called ELA. ELA stands for Emergency Liquidity Assistance. It basically enables national central banks to print money to fund their private national banks up to a certain level. Greece was very angry that there was a cap to this level, but this is an emergency program. In theory, in the ECB board or governing council, one of the two, a 3/4 majority can block a country from using that. But of course, that didn't happen because this was all political. This reminds actually of the end of the ruble zone. When the Soviet Union collapsed, all these little countries like the Baltic countries, they also used rubles. And one of the reasons for the high inflation at the time was that national central banks were just happily printing and trying to keep their banks afloat. But at the end of the day, of course, everybody printing, thinking they were ripping off the other, resulted in everybody ripping off everybody, and you had this high inflation figure. So why am I mentioning that? Maybe in a very big crisis, you will see similar things in the Eurozone, where all countries will try to keep their banks afloat by making use of this specific ELA option. But at the end of the day, of course, this will mean in a cost imposed on everybody. So I'll leave it there, and I happily take any questions. And I meant to add that I forgot the TPI in 2022, which you have also mentioned.
The Transition Protection Instrument.
It
was in July 2022. And the goal was the containment of unjustified market developments that endanger the monetary policy transmission mechanism. And the activation was, when necessary, by decision of the ECB Governing Council.
That's a standard excuse. So it's never that, countries or banks have not been responsible. No, it's the sort of the mechanism to transmit the money is not working well. Right?
But it was tied to conditions, and the conditions were sound budgetary policy, compliance with EU financial policy framework, and not part of an EU or IMF aid program. So the country had to be out. Well,
very strict conditions.
Yeah. But, you mentioned the OMT, which I omitted, but, the OMT was actually the only one that was not put into place and into practice, because the conditions of the OMT, the outright monetary transactions, were that the state must participate in EU and IMF aid program, and it must meet all the requirements. And none of the states had met the requirements, and this is why it was not used. So it's still there, but it's still an unused tool. So we are very inventive when it comes to excuses. In other words, after your list, it's a long list.
Yes. Gunnar?
Well, thank you very much for these interesting discussions. Disastrous policy sequence. For those of you who don't know me, my name is Gunnar Beck. I'm an MEP. I'm a member of the Econ Committee. Peter, perhaps just what was the name of that program which allows national central banks?
ELA. Emergency Liquidity Assistance.
Right, yeah, I'd heard about that, but I never knew it had a name too. Anyway, let's talk about a country that's also not well governed, not so well governed as you called it, namely Germany. Two questions really I have. One is, Dr. Korn said initially that the printing of money has very different effects in the US compared to the EU. I'd be quite interested if you could expand on that. And then secondly, one thing that wasn't really said directly, of course the main effect, Draghi had no intention of ever raising interest rates again. The man's promised all sorts of things. I don't believe he had anything. He obviously wanted to protect a certain saver class, but I think the other thing is loose monetary policy was designed to finance, to bankroll irresponsible government policies, migration and the green transformation. There weren't, in normal circumstances, there wouldn't have been any funding for this. They couldn't have afforded it, but he allowed Mrs. Merkel to engage in all the follies. She engaged in. So there's no way back. They're never going to really raise interest rates significantly. And really, you said we have to raise interest rates. Do you seriously think they ever will?
Well, right now, if I may jump in right on that, right now we are at 4.5%. But, we had times when we were kids, 10, right. 11, 12%, and there are countries in the world that have even more. And, we had times in the US when you had interest rates where, really could earn money on your interest, and where it made sense to save. And I think this also ties to the issues that we were partly discussing with moral hazard and in the first session, and the philosophy of that we face these days, that the principle of ownership, of owning something and not only borrowing stuff, has completely been forgotten. And I think we should kind of go back to those solid principles of markets. And ownership is truly a basic element and a value that is also instituted in our core European values that consist of the achievement principle and also competition. And therefore, it has a philosophical dimension that we all need to address and work on, one thing. And the second thing is it has, of course, an economic dimension. And the interest rates gradually went down for the past 30 years, even more so, and even longer, much longer. And they reached a point, they were zero after the GFC in 2008. And even then, they went negative then. And, you know, if the price of money is negative, I mean, what is the value? What is the worth of it? So it's as simple as that. And the problems that you addressed, I think, are much older, because if the European countries had stuck to their principles, whether it's the Maastricht criteria and all those laws that we have put on our shoulders and we implemented and started and would not have broken them, then we would be in a much better condition. This is what I can recall, or what I refer to as doing the homework. You know, keeping your budgets at bay and not running deficits for decades. And we lost this. We did not follow this window of opportunity in 2002, 2003, 2004. And then things became worse and worse and worse. And Draghi just jumped on that bandwagon. And
It's a way back from, say, the corrosive influence he's had. The man is the devil, and he's fundamentally corrupted us. We are no longer in the kind of sound position we were 20 years ago. I mean, there is no appetite for the harsh medicine that's required. It may just be that we will vanish in a spiral of stagflation. That's my prediction.
Hopefully not. I mean, the issue is, and if we look at Greece has been kicking the can down the road for a very, very long time. You know, the very prominent Minister of Finance writing Harleys and spending money like hell. But the last government there started doing their homework. They did structural reforms, you know, in a very positive and good way. And they kind of got back on track now. So it can be done. It's just, the medicine is just bitter. But eventually, I think we will all have to take it.
Well, it's a good question, and I don't think everybody has like the answer. We can only speculate. But if you look at the United States in the 70s, they did engage in a serious operation of increasing interest rates. Yeah. I mean, in the last 2 years, yeah, 1.5 years, we have seen a modest increase in interest rate. It's still very low, I agree. If you look at the US then, it was Paul Volcker. He was the Fed chairman who was appointed not by Reagan, but by the predecessor, Carter. Why? Because Carter was completely desperate. Yeah. And he was begging Volcker to, you know, to become Fed chairman. And Volcker only wanted to do it under the condition that he would then be allowed to take tough measures, which he did. But then even Volcker was stopped because Carter saw how it could endanger his re-election. But after Carter was out, then Volcker doubled down. And so it's interesting that you see in the 70s, these American central bank chiefs, or Chief Burns, I think, they did not go far enough. They were not allowed to go far enough. They did not dare to go far enough. And then inflation was not stopping. It came back. So maybe we'll see the same in Europe. Clearly, the ECB is desperately looking for any excuse to have to stop this, right? But if inflation remains elevated, you know, the ECB can only control like how much currency it pumps into the system. it cannot control to what extent people have trust in this currency. So if trust in holding euros remains low, then I think central banks will ultimately be forced to go to some form of normality. Of course, you could have a different scenario in which European governments agree to roll over the next generation EU. Yes, and I think they will, and to a degree they will replace the EU budget probably with this, because the EU budget is very annoying. Every 7 years you have this annoying negotiations, which is very embarrassing, with net payers and net receivers, is not conducive to a cordial atmosphere. So they probably will say, oh, why don't we use the NGEU, just taking out loans and then let the grandchildren pay. But again, then probably at some point they will have to have the ECB to buy these loans if nobody else wants to. So I don't think there's any escaping if you have our welfare state with the programs you mentioned. Welfare programs, of course, migration costs money, but the Green Deal, energy experiments cost money. So ultimately, I don't think taxpayers are willing to pay taxes for that. So politicians will be forced to use the monetary lever to finance it. I don't know if you've seen Mr. Bukele, the president of El Salvador. He gave a speech recently, and he said that actually governments do not need taxes to finance themselves. They can perfectly finance themselves with monetary means only. And the reason that they levy taxes is just for the pretense. And I don't know if he's right. I think the truth is probably in the middle, that they need both. I think ultimately they will if there's no correction. I mean, if we see a rearmament of Europe, which in itself is, I think, a good idea to have a strong defense. But then if you do it without cutting spending elsewhere, then again you will need some money, magic money tree programs again. And as I mentioned, they can control how much money they pump into the system. They cannot control the trust that savers and people have in money. So I think there's the break. And in history we have seen occasions where it's never black and white, but where there was a correction of some sort. So I think at least it's one possible scenario. Not all the scenarios are negatively or necessarily complete wipeout of all savings and hyperinflation. That is also a possible scenario, but I do think that the muddle through and modest correction is also a possibility.
I think one important point is, since the 1970s, that our debt levels, the sovereign debt levels, have risen way higher than they have been, and also the corporate and household debt levels are much higher than they were before, and those are big difference to the 70s then. And of course, also one other thing is that the banks back then were much more efficient and profitable than these days. Of course, the competitive world was also different in the 70s than we see these days, but those also needs to be taken into consideration. And I would say you cannot compare the 70s with what we see. I mean, you can learn from the mistakes that were made, but it's and make sure that monetary policy is this and fiscal policy is on the other side. Of course, but that's two different things.
Yeah, just to ask a quick question. One of the things that was different in the 70s was, two things that were different. One, there was no euro. Two, in the UK, for example, the Bank of England was not physically independent of government. So in the late 90s in the UK, a decision was taken to grant the Bank of England independence. It's operated in very much the same way as the ECB. So you said, Barbara, several times about doing your homework, which it sounds like very good advice. It seems to imply that having done your homework, the answer just falls out. It's just a technocratic question, And really, if I'm understanding you correctly, it sounds like you're saying the technocrats have gone wrong because they provided the politicians with all of this free, cheap money. Whereas actually, if the politicians were accountable for monetary policy, at least then it would be clear that it isn't a technocratic exercise, it's a political decision. In other words, what the ECB do is providing a big cloud of smoke to the benefit of the politician.
It's a common trick.
And you know, this is, yeah.
Sorry.
No. Well, this is why I said, you know, keep Brussels and Frankfurt separate. And, you know, in times of crisis, of course, coordinate, but, you know, separate entities and not mix all eggs. And I'm thankful that you put all those various tools that were used, that you told us again or reminded us.
I think, Tony, if I can, I think it's a good point, and I think in the UK some people are now saying we should end the central bank independence. And the original idea of central bank independence was to make sure that they would actually, you know, not that money would not as much be used to finance the government, but then you could argue that the system has, the system has been changed in the sense that now it serves as an excuse to go further in abusing money to fund the public finances than would have been the case if the politicians were in charge. I think it's a fair argument that you could make. Yes, like whatever, of course, you know, proponents of free money would say, look, whatever system you have with government money, it will always be abused in one way or another, with a nominally independent central bank or not. But also the ECB, like the fact that we have a politician, I should say a criminally convicted politician, Christine Lagarde, you know, I think tells you everything you need to know, right?
My very shallow slip, by the way, and during my professional life, I was advisor to 4 central banks, including in countries with very, very acute difficulties in monetary policy. And when you mentioned the purchase of the secondary market, I think the first remark to be made is that the ECB has made an infraction or has not respected the treaty that created the bank. That's the point. Secondly, in my time, when I started my career in the bank and we refinanced assets because of problems of liquidity, we always paid a penalty.
Mm-hmm.
What the ECB has done is, you are right, they are on the secondary market, but they give the money to the banks to purchase and then repurchase on the secondary market. Now, the banks are receiving a loan from the ECB, let's say at 2%, and replace the same money at 4% at the ECB. Now, for me, as a non-banker then, that would have been an infamy.
Yeah, no go.
Concerning the independence of the central bank, I've known 2 cases in my career. One is famous, is the Central Bank of Poland, that was confronted in the 90s with an inflation of 100%. Now, they could have made meetings like this, thousands and thousands and thousands. They need only one man.
Leszek
Leszek
Mazarowicz.
who came as Minister of Finance and said, now, laughing is over, let's be serious, let's take the courage.
Yeah.
The inflation is 100%, my interest rate will be 100%. Inflation was stopped in about 4 to 5 weeks. With Christine Lagarde, we can be sure of one thing, it will last forever, as long as he is not replaced by someone from the Deutsche Bundesbank or anyone else. Concerning the independence of the central bank, I fought for the independence of central banks all my life. Why? Because, and we see the case in Great Britain, before the election, suddenly the money goes.
Mm-hmm.
The money goes because the party in power wants to stay in power. This is in the gene of any politicians. So he instructs the central bank, now I need billions because I need votes here and votes there, and I will spread it all. But I fought for the independence of the central bank. I was for years advisor to the National Bank of Slovakia, one of your neighbors, and the Prime Minister then was what the economists qualify as a thug, a former socialist, a bandit, a criminal. And he wanted to eliminate independence of the central bank, which was enshrined in the status, in the law, as a copy of the Deutsche Bundesbank statute. So you cannot be more independent than that, Deutsche Bundesbank at that time. We called two politicians, European politicians, parliamentarians, who came in the parliament of Slovakia and made a case for the independence of the central bank. Now, what the heck has been going on in the last 20 years that we shifted from such a discipline to such free for all, we can do anything you please. I can inject billions of dollars and with no result at all. We are in a crisis for the last 20 years. So what is lacking is independence of the central bank, but the real one that respects the law. And secondly, the courage of the politics. That's all.
I think it's also a question of the rule of law and not the law of rules. And this is something truly important, to stick to those principles of the rule of law and stick to those engagements and to those contracts. After all, you know, the statutes were contracts, and stick them and not break them. And I fully agree with you when it comes to the independence of central banks, and that we need to keep politics out of that. It's central banks should be a pool of experts who know their tools, who know what they are doing, and not being influenced by politicians who play public choice theory. And, you know, Jim Buchanan was awarded his Nobel Prize for explaining exactly that, you know, using other people's money and spending it to be reelected. And this doesn't have anything to do with sound monetary policy. And this is not where we are right now.
The calculation in politics, I think, is very different. For a politician, increasing the supply of money is to satisfy more voters that will vote for you without making sacrifices for the ones that you have already acquired. Now, if you say, no, I will not increase the amount of money, then he will have to make choices, and to get some votes, he will have to lose some others. That's the point that needs to be made. One point also I wanted to mention, that was the discussion we had before, but I think it's very important. How do we get the message, or do we spread the message? Stop, we are on the road to win, essentially.
To serve them.
But one name was not mentioned, is media. The media would be essential to spread, but which media?
Well, of course, it's a very important point, and great points, actually. Thank you. Not everything is bad. In the last few years, we've seen the rise of Bitcoin, which I know I mean, I'm not that young anymore. I'm more, let's say, pro-gold, but people younger than me are typically very big fans of Bitcoin. And maybe Bitcoin will completely fail. Who knows? At the moment, it's at its all-time high in euro, which is interesting. And it exists since 2011. So we should give it a bit of, let's say, a fair chance still, I think. But I mean, even if it would completely fail and turn out to be a scam, then you know, it still, I think, has done a great job of educating a whole generation. There's many young people that have embraced Bitcoin in recent years, but for the right reason. Yeah, some of them was just an old-fashioned get rich quick scheme. But for many of them, their passion for Bitcoin was a logical consequence for a very critical attitude towards government money. So I'm just saying that, yeah, we have the mainstream media, but in social media, Bitcoin and the support for this is very big. And perhaps now with Bitcoin at an all-time high, I mean, I'm personally of the, I'm supporting, let's say, the Bitcoin maximalists, the people that say, if you have cryptocurrency, it should be a currency that is completely decentralized, which means that if the authorities want to act against it, there is nobody to lock up to jail. And that's basically only the case for Bitcoin, not for all the other cryptocurrencies, which is why the Bitcoin maximalists, the proponents of Bitcoin, say, look, we need to only support Bitcoin and all the other stuff. Now, even in its price, I haven't looked at it in detail, but Bitcoin is the big star of this year's big rise. There's other people who say, yeah, that's because some central bank has been buying $3 billion of Bitcoin. Who knows? We'll all see it. But just to say, you know, the media is no longer the media. It's now social media, especially for minus 30-year-olds. And not all is bad. Yeah, some of them go with the old-fashioned bad scheme mentality. But many of these young people see that there's something wrong with money, and that this is an attempt to, you know.
I agree with the enthusiasm for a new kind of money. The problem remains as it is with the banks. What do the Bitcoin company do with their assets? What are the assets? Look at the one who is in jail. He pumps money. You had theoretically a fortune in your hands as his clients, but he bought yachts, he bought fancy villas, he splashed the money all over his own subsidiaries. Mr. Bank friend, who is now his name.
Well, I think most Bitcoin maximalists would not like to be associated with him. Also because
a guarantee that even for Bitcoins, the assets are there.
Well, they say not your. What do they say? Not your wallet, not your Bitcoin, or something. Yeah. Like basically, you have to hold it yourself, and you shouldn't trust some intermediate. I mean, that would be their answer, right? Again, I'm very much in doubt about Bitcoin. I wish it well. I think it's a fantastic experiment to create digital money unrelated to any government, to, you know, prevent all the problems we've been discussing. But I think we have to be honest. Nobody knows if it will work. And the jury is still out on it, just like on the French Revolution. No, we know that was bad. But anyway.
Two questions. The point that was also raised in the first panel is the debt level and the effects of changing interest rates on state budgets, but obviously also on companies and households. Does either of you know to what extent European debt is being held outside of Europe? Because the debt could be ramifications of, I think, considerable importance. And the other question, what is your opinion or perhaps your hunch if the ELA would at some point be activated by a member state, what would that signal?
Well, to your first question, unfortunately, I do not have the data here. But we can, I mean, you will never fully get the full information, but at least you can have some. I will have to look it up. And the ELA question, I throw it to you.
Not just.
It sounds like a good start of spiral.
Yeah. Well, it has. Look, Greece has done it extensively back in 2015 in its third crisis, right? Yeah. But it was capped. They could do it to a certain degree every month. Yeah. But I remember vaguely that also Ireland, Belgium, to some very tiny degrees, have been activating this option. But my point was more that, you know, it has been done all in all somewhere on the sides. You know, even for Greece, it was like some sideshow a bit back then. But you know, maybe in the future, when there's really no agreement on bailouts, and even in the ECB, maybe if things are blocked there, maybe that will be the only thing that they will agree, not to block, let's say, excessive ELA activism, you know, by national central banks to keep their banks afloat. Maybe, well, it's just speculation of my part. But if you look at the history of the ruble zone, that's sort of how it ended, with every of these jurisdictions taking care of themselves, thinking that they could export the damage, but they were all exporting the damage to each other. And on the first question, yeah, I tried to look into when you had the Next Generation EU, the Europe's Hamiltonian moment taking on debt, and I couldn't find any figures. And yeah, I wouldn't be surprised if some debt has been bought by China. Now, of course, the US is a big debtor of China, but then the US also has the world reserve currency, so they hold each other in a grip. This is not the case for Europe, so I think it's I also don't have the stats here, but it's a very legitimate concern. Like how much of our debt is owned outside of the jurisdiction? Because historically, Belgium, Italy, people said, oh, it's not so bad that you have high debt because a lot of the debt is owned by your own citizens. You can just rip them off easily. That was the idea. So the fact that you can rip them off easily is, of course, not something we should support. But then from a security perspective, it's important, I think, to indeed take that into account. How financially dependent are you of, I would say in particular, China.
And how the system is interlinked.
The CECP gobbles up more and more of this, but that's not a problem, wouldn't it?
Then it becomes China's problem. Yeah. You could argue that, yeah?
No, I'm not serious.
No, I would not. I would not.
Well, I'm sure people will make the argument that if that would be the case, sure. China has more and more of a problem. Really does.
Well, I addressed it before, but it's unknown to us. You can only estimate, but are those data true, realistic or not? I mean, go there, see for yourself, and then you have a better understanding.
Right, good. That being said, unless there are any more pressing remarks or questions, I think we can conclude here. So thank you very much for making it. So yes, I look forward to welcoming you at the next events that I will be hosting. If you're not on my mailing list, please let me know and I'll put you on. So thank you.